Hi, everybody. Welcome to the second segment, episode 302 of Sold with Updike Pugh. I'm Jeff Updike.
And I'm Weston Pugh. And today we're going to talk about some of the Dallas's biggest market movers that you cannot ignore.
There are some factors in the Dallas market that I think, even if there is a recession, I think it's going to push us through. Dallas has always been very resilient.
I would agree with that. I think there are going to be some interesting things, and we've just seen them like in the last 30 days and the last 7 days, shifts, change that. I mean, even the National Home Association of Home Builders is taking a look at some of this stuff. So let's jump into the very first one, which is job growth. And we all know we base it on the traffic patterns, but there has been so much job growth here, and we're even seeing we're trying to pull data that we thought was relevant and that had some more bones to it. And so we're talking about 64,500 new jobs were added in the last year. And it's an increase just a hair over what it is nationally from 1.5 to 1.4, which is great. But I feel like it's a lot. If I were saying, I would still feel like we grow more than the national average.
I would agree. Our economy's always been very steady. When a lot of places around the country were having these really ups and downs in their real estate market, ours just kind of grew at that 3 to 4% annual appreciation. It's grown a lot more in the last 8 years, but if you averaged all of that out, I bet we're still close to 3 to 4% appreciation over the last 40 years.
Now, one of the things that I think is really interesting that's different from from Austin, San Antonio, and Houston is the diversity in our employment. So we're not oil, gas, we're not tech, we're a little bit of everything. But one of the interesting things that I saw on this was that financial activities number right there. This is a big indicator that we're going to talk about in just a minute, but there is a lot more happening in that financial market. And there's actually, I believe we have another article that shares what that actually is responsible for from Axios.
And so this talks about Y'all Street, the opening of Y'all Street here in Texas, which is the Texas Stock Exchange.
But it's got even a weirder thing. It's like bless you or something in it. When I was Googling, it's really, it's a lot. But what we're saying here is that we're seeing more and more of this financial development. And it is based on the headquarters are moving here. If you scroll down just a little bit in the article, you'll see where it talks about how Goldman Sachs is building a massive complex near downtown. That's between the...
it's going to be right there by the Victory Park. And
and
the house and
the Perot Museum of Science.
Yeah.
So this is really interesting to see how this has really begun to shift. Also, we'll look at the Chase.
I know that. I read that bullet point earlier. I was like, wow, that's interesting.
So we're seeing a lot happening, whether it's Wells Fargo, Deloitte, Charles Schwab. There is a lot more in the financial district.
So mortgage rates have begun to drop to some of the lowest levels in 5 months. We're seeing mortgage rates now at about 6.5%. That was the expectation of where they would be. I mean, they've been as high as 8% in the last year.
They have, and it's interesting that we're seeing this dip and it's creating this increasing activity. 7% in the number of mortgage applications that have just recently happened. And this was actually written on the 12th of this month. You're also seeing financial activity rose 16.2% from a week ago, which...
It seems like a lot. The refinance activity, I mean, you could really just go up from, I mean, if you had 100 last week, you have 116, and that really could just be somebody calling in.
Correct.
So...
Because it's
a bit premature for that.
Agreed. Because 6.5, unless you're stuck at 8, I don't know. It needs to be at least a point or greater.
Yeah, absolutely.
So, anyway, I think that was interesting. I'm not sure if that's just clickbait or what. They didn't cite any sources. The impact of tariffs on home prices. This is the one that kind of has me go. Yeah. I would say where we saw this happen was when we saw during COVID, when we saw the breakdown in the supply chain, and when things did cost more, how developers did reach back out and added prices. But the big one right here is the lumber that we're seeing.
Yeah, I mean, coming from Canada, I think all told they've got about a 40% tariff on them that started overnight, and that we get 70% of our lumber from Canada.
And this is also causing this huge shift in like the cost of lumber futures. So if we see the cost of metal, if we see the cost of lumber, we see some of these other goods that really begin to increase, you will see a direct change in the pricing of new home sales. So that being said, if you are considering new home sales, I would move sooner than later. That's just me.
Okay.
But yeah. So Lawrence Yun kind of is a great way to wrap up this little segment.
Lawrence Yun is the chief economist for the National Association of Realtors and has had that position for many, many years. Has, I think, a really interesting perspective on what's going on in the real estate industry from a nationwide perspective.
And he really pointed out that the economic influences that are causing the fluctuation, though we are having them, it is still a challenging time. There are rising costs, interest rates, but job-strong growth and limited housing supply continue to support home prices. So I would say that he's giving us probably a B plus for the housing market. And I'll take that because I felt like when we get into an A, it's a little too...
Get a little crazy.
It is a little too churned up.
Yeah, so. I would agree. So I hope you found this interesting. If there's any other detail you'd like us to flow into, we'd be happy to do that.
And just remember, we want to be your realtors for life.
When you're ready to talk real estate, you can reach us online, by phone, or by text at 214-377-2223.
And remember, we want to be your realtors for life.